All right, guys. Good morning, good afternoon. Hope you're doing well. Today is the 14th of August, 2022. I'm going to be sharing with you my broad market analysis this week. And that broad market analysis is going to cover tonight, which is Sunday for futures. And then we'll be looking into Friday, the 19th of August, 2022. So again, I hope you guys are having a great weekend. Hope you're doing really well. Let's go ahead and get started with this. This should be pretty straightforward, pretty easy. So let's go. SPY. So first things first, I want to be looking at a monthly chart this week to begin with. And the reason why is because I know how you feel, probably a lot like me, where the market, it feels great, right, for us bulls who are finally getting our light here. But on the short time frames, it feels like we're a little overextended. But as a disclaimer, it's felt like that for the last several sessions. So the question is, where are we headed? And for me to see that, I need to look at the bigger picture because I think the focus on the smaller picture right now is really ruining it, honestly. Kind of, at least for myself, and I think a lot of traders have actually seen this, where you feel like you just don't have enough on. But right now, is it time to do that after, such a big rally? Well, let's go ahead and dive into it. So on the SPY, the inside and up has formed, and we're going to zoom in here, and you can see that it's really beautiful. Again, this is a monthly candle, and today is the 14th, so we still have 13 trading days left. So this candle could change. Please know that. So the current formation that we have is inside and up, and this inside and up formation again is what I like to front run as a demand zone. So again, the idea here is that we're creating a demand zone and we're pushing up through very major levels. So notice that we have this green Fibonacci there. That's going to be your 23.6. And far as my methodology is concerned, and I've been teaching this for many years now, is that in this rally that started down here toward the COVID rally, as long as price could hold the 618 here, then that trend was not broken. Notice that price actually just came back to the 50, and that's okay. And as soon as we break over the 23.6, this actually starts what I consider a extreme bullish scenario for the bulls. And matter of fact, that kind of starts over this 38.2. But now we're actually in a channel that's extremely bullish. And this channel, if you go back and look at it since the inception of the market, you'll see what I mean. Okay. So inside and up, and I believe that this week, even though this is a monthly chart, that the 23.6 will be like a major line in the sand for you. So the 424.68 level, okay, 424.68, buy this trendy edge that's right here, okay, so roughly around 421 and some change. So between 424 and 421, I expect buyers to show up. The overall trend for right now, you could see it here on the daily, the weekly, it's extremely bullish. The monthly is extremely bullish, and the year is just kind of neutral, and I like that. That's just saying short time frames, it's been extremely bullish, but don't forget that the yearly is neutral, okay? So again, this is going to serve as a very important level going into this week, okay? So 421 by 424 and a half. All right, let's look at the TTM squeeze. You can see here that we have quite a few dark blue bars here. It feels like, we could be coming into a squeeze. It's, looking for these red dots. We'll see. All right, but my main focus right now is going to be on the inside and up, the Fibonacci, and then looking up. Please understand that I have an inside and down formation that we located a long time ago. This is on a different time frame. I believe this is on the quarterly. Yeah, so right here, the quarterly was an inside and down. This is your major supply zone from a quarterly perspective. So when you ask, like, how far can we go? It is possible that price could move up towards the 446 level. Okay, so just know that 446. So it's like a if this then that. If we can hold that 421 by 424, we could see prices rise up towards the 446 level. Okay. All right, let's go ahead and then dive into really quick while we're sitting here. Let's go ahead and dive into my neutral strategy. And you guys know I push this out every week. I have a short video on how to trade this. So if you do not know how to trade that, you can find that on my YouTube page. All right. And it's pretty straightforward, even though it's a little bit more complex. We're using Fibonacci levels, supply and demand levels, extensions, the EMA cloud. We're putting all that together and looking for that synergy, right? And looking for the higher probability trade by using these. And the idea is that the neutral strategy, so between those numbers that you see in the neutral, that area is really an area where I don't want to do much. Matter of fact, it's more of an area where I would like to, on a 0 DTE day, use those levels as an iron condor. Okay. Now you can see that the upper line is green and lower level is red. Please pay attention to the overall trend. The overall trend right now is pretty bullish. Okay. And you can see that here. All right. Pretty bullish. So because of that, all right, because of that, I want to be thinking that if price pulls back, then there's an opportunity to buy the dip. Okay. Again, opportunities to buy the dip when price pulls back, but we need to know what those levels are. So let's go into, let's do the weekly here, and then we will do the daily over here. Okay. And this is what we're looking at. So again, up here, again, towards that 446 level is where really more of the supply is. But looking at this rally out of the inside and up, okay, it started here. I've been showing this for several weeks now. This is where we went long overall in the portfolio, meaning net long with some hedges and the hedges not working out. But we pushed up very nicely here. We just absolutely cut through this supply zone right here like butter. I mean, just literally cut through right through it. And I think a lot of traders were looking for this area to be some sort of defense for the bears, and it just didn't work, right? So even if you put like some volume profile on top of this, you would have saw that we had a lot of volume here. But we cut right through that, and here we go. All right. So far as my neutral strategies go for this week is 429.5 by 424. I would expect price to just kind of digest in this area until it breaks above or below. So if we break above that 429.50, there's a possibility that we could break into the 433. That would be my target and where I'd want to trim. Notice that the 429.50 level, if we take this level and go left, it's right here at the topping wicks. A lot of selling pressure right in here. So this is why, again, this is going to be a neutral level for me. The bottom red line happens to be a trendy edge. You can't see it under there, but we would expect that to be support for now. Notice on this weekly chart that this candle is extended quite a bit from the cloud. And again, looks like we need a little bit of digestion to get some of this to kind of get a little bit tighter and start to hug price and get supported. Okay. So again, the divergence there, this is just a little overextended again on the shorter time frames. Okay. Over here on the daily, you can see here what I'm looking at as well. Again, we have these topping wicks that are shown on the weekly, but you can see here on the daily, there's just some structure there on those candles. Okay. To the downside, if for some reason we break below 424.98, I would expect support to come in at around 419 by 422, somewhere in here. And again, if you've not seen how well our levels do, please go back to last week and check those out. I keep a log of all of ours for many years now, and again, can go back and study those. This is what I'm looking for in the SPY. Again, overall trend is really bullish. The short time frames say we need to digest a little bit, but the market's not really digging that. And I'm going to show you at the end of this, looking at the SKEW and the fear and greed, maybe why we still have a little bit of room to the upside. Okay. So again, that's SPY. Now let's go ahead and take a look at the Qs. And once again, we'll start the same process over. And again, this is all technical related. Okay. So technicals, we came down into the 618 on the monthly time frame. This was an absolute beautiful test of the 618. The rally started again, just like the SPY back here towards COVID. And you can see measuring this rally itself, we have now pushed above the 38.2. And this is bullish. Notice that the cloud itself, though, we have not broken over the cloud, except for it's been a while actually. We didn't break over it since April and March timeframe, and right when we broke over it, I guarantee you a lot of people felt really bullish, and then there is where the drop really started from there. Not saying this is going to happen again. I want you to do it if this, then that scenario. Just like I was showing you on the SPY, I do believe that this level is going to serve as a very key number for this week. So that's 321.79. Now, where did we close? 330. So that gives you a lot of room to the downside. So even if we pull back, I would expect buyers to kind of show up in this area around 321.79. Okay. It doesn't have to be perfect, but from a Fibonacci standpoint, this is our go-to, and that is our support on a monthly time frame. Okay. If you're too focused on the smaller time frame right now, I think it's really difficult. I mean, it's fun, right? There's some fun opportunities, but we also don't want to miss out on the bigger run. Okay. So again, that's QQQ on a monthly. Let me see if I got anything else going for you. So unlike the SPY, the Qs still have some time to run up into the 23.6, which puts us around 354. You can see underneath there we have a trendy edge as well. Let me go ahead and take these Fibonacci's off for you. You can see that we reclaimed the lower trendy edge, so that's a positive for a long-term trade. That's what we look for there. And then our targets, again, up and to the left, I'm looking at 345 by about 355. So again, a lot of room to run there, but once again, we need those Fibonacci's to hold. 321.79, bigger picture. All right, let's go ahead and go back into the Qs here. And I'm aware that I can link my charts here. I just, for these purposes, I do not have them linked. This is what I'm looking at. So we have a red to white momentum change on the candles. We're breaking above the cloud just now. So from a technical standpoint, this is really just starting to look very bullish for me, which is crazy, right? After we think about the rally that we've had, it feels kind of insane that this could continue up, but we don't want to fight the trend, right? So here's that double inside and up formation. This was demand. Again, front running off of this demand. We were looking for these targets here. We got those targets. We pushed up through supply, broke through like butter. This was definitely the leader in the space, and I believe that everything else was just kind of trying to move with it. Okay, so this week the levels are over here on your right hand side. I'm just going to open this up a little bit, and you can see here 328 by 330. So this is actually pretty tight so far as risk is concerned. So if I were going to take this long, and again, I have a video, so if you guys don't know how I trade this, please look at that video. It's a very short, like 4-minute video. But basically, I'm looking to go long over this, trim at these levels, and then bring your stops up. And if for some reason we break down, these are my targets to the downside. And again, I would be trimming because the overall trend itself is bullish right now. Okay, and you can see that. So when we are bullish and we're pulling back, we're looking for support levels, and my support levels are annotated right here, 326, 324, 322. Now, one thing that I notice is that my levels this week are really tight, and because they're tight, it makes me feel as if the market is going to digest, okay? So again, they're tight, feels like it's going to digest. Every time I felt like that this week, we had a couple opportunities where it felt like it, but then they just continue to push up. Okay, so if for some reason we take out these upper levels this week, then I will add more levels. Again, the monthly is my major focus. This right here is more for 1 to 3 day, swing trades, or just micro trading, scalping trading. Boom, goes over 330.85. I place my stop, and I'm looking to trim quickly into 332. Okay, that's the idea there. All right, so that is SPY and QQQ. Let's go over here and get back into the everything that we want to be looking at. So let's minimize this really quick. And let me take you into earnings. So I use Earning Whispers on Twitter. I always have for many, many years now. And, there's not much that I want to talk about. I just want to make you aware of the earnings. And if you're trading anything that might be related to one of these names, it's very important to know what's on there. So like if I were trading Target and Walmart is reporting on Tuesday morning, I would probably want to know. But these are some of the bigger names for me that I'm paying attention to, and that's going to be Walmart, Home Depot, okay, and then moving on down here, see Target, we have Cisco, Lowe's, Krispy Kreme, no. but it's on there. But I'm not interested in Krispy Kreme. I'm always interested in Bath Body Works just because it's one of those big, retailers that I'm kind of curious how they're doing. They've had some trouble in the past. Kohl's, obviously, I'm definitely interested in this with school coming up. These have been on my focus list for a possible trade, but I might actually trade Kohl's into their earnings this week, but I'll be using a much smaller time frame just for an intraday trade until proven otherwise. And then we have BJ's there. And then going down the list here, we have Ross, another big one that I would be interested in. And then on Friday, I really like the idea of John Deere and Foot Locker. Don't really care about Buckle, but those ones that I have arrows on, those are like my favorite so far going into this week. Now, fear and greed, we'll talk about this a little bit later. Fear and greed, this is interesting. I've used it for many, many years. It's part of my broad market analysis, and I want to know where we're sitting. And when we were neutral and the market was moving up, I like to tell, my team here, even if things feel extended, I like to think of the idea that the market needs to start getting into the greed and an extreme greed. Okay, this is the better area for me to start thinking about a longer term put cycle or a down cycle. And we're not quite there. We were here for quite some time over on the extreme fear. And because of that, I really like the opportunity of going long at the right times. And I showed you guys that the double inside and ups on the SPY and the Qs. And we've been coaching through that for the last several months, and it worked out very, very well. Well, a lot of people are having a hard time on the long side because guess what? The whole idea out there was that the market couldn't go up, that the world's coming to an end, and it's always seems to be that. All right. And it's funny how the bad news comes into demand and the good news goes into supply. So just remember that. We should start hearing a lot of better news catalysts out there. When you start seeing that and you start seeing this fear and greed start to raise into the greedy and extreme greed section, I definitely would be looking at taking caution with all the other charts that I'm going to show you. Okay. All right. So the next one I use, and all this stuff is free, I use the economic calendar here. And you can see that on MarketWatch. This just gives me an idea, and I post this in the room so people can see what's coming on for this week. So this is next week's major U.S. economic reports and Fed speakers. There's a lot of Fed speakers this week, so take a look at that. Obviously, we have initial jobless claims and so forth, but it's a normal stuff. It's all just a catalyst to move price to supply and demand, and that's what we teach. Okay. All right. So the next thing that I want to show you is going to be we are going to take a look at the DIA, and I don't have levels for DIA, and that's the diamonds, folks, or the Dow Jones. I want to show you what I see on the monthly, and again, this is pretty straightforward. We have an inside and up formation, and if you've been following me for quite some time, then you know we like to front run off of this. So basically, we're looking for prices to move once we go over that base candle, and then we're looking left and looking for, selling pressure, and that typically comes in the form of an inside and down. We are over the trendy edge and going into this week. You can see that as long as 322 holds, I think we continue to move up into 338. And then above that, you could see 346. So again, if this, then that. Things look really good. We're back above the cloud. We're inside and up. It just again, on a short time frame, it looks like we could have a little bit of digestion. IWM futures or RTY. But let's go ahead and look at this. This is a chart that I put out months and months ago. It worked very well. You can see that we came into the inside and up, and this is a beautiful demonstration of supply and demand, how price has, you know, stalled here on the topping wick. And again, I have another video out there to teach you about the topping wicks, probably one of the most important formations when you're moving to the upside and you start to see something like this on the smaller time frame. You want to be aware. And then we go inside and then we go down and then we just inside and down and we move right into this beautiful inside and up formation. I'm almost like literally to the tick of our box, and then IWM's pushed up ever since. Now from a curve perspective, or an if this situation here, I want to say as long as we can hold the trendy edge down here at 195, you could see prices continue to move up towards 206. So again, 195 is a key level for me for this week going into IWM. Okay, I'm not going to speak a whole lot on the Dow and IWM. I kind of stopped uh, reviewing those and concentrate primarily on our SPY and QQQ. Okay. Next thing I want to show you is the SKEW. And again, if you don't know anything about the SKEW, please go out there and Google it. I mean, the easiest way for me to describe this is you have your hedge funds, and this is kind of how they are positioning themselves. And these levels will really help you out, folks. One thing I would tell you in your own time and studies, please put the SKEW on your chart, put the SPY in the background, and just look how it moves. The idea here is that when we get into these extreme levels between 130 and this 120, and these are my levels, I've kind of tailored them a little bit to my own needs and with supply and demand. But once we get down here, like we did for several weeks, actually 2 months, I believe, and we built down here, this was typically where you would see the SPY move up. Now, the idea is that timing is the variable. You can't just come out here and trade specifically off of the SKEW. You want to be looking at the other charts I'm showing you, and they all kind of come together. Again, that synergy, right? I need to see all this stuff line up together, and this gives me the better sentiment going forward into the coming weeks and months and so forth. So again, we were on a risk on environment, meaning we want to be on the long side. It just took a long time to develop down here. Matter of fact, it took longer than most all the way through. I mean, if you go back and you look at this, you can see that it's very rare that the SKEW hangs down here for this many months before the market actually starts moving up. So this was, for bulls, this was a lot of pain down here for a long time. All right. Well, now we're pushing up. Okay, we're pushing up, and the idea again is if we start to reach levels towards that one, I would say 135 into 145, it's just a little bit of caution. You want to raise that yellow flag. If you're in your portfolio long, you're thinking to yourself, well, maybe I want to start trimming some winners, some big winners. That's the idea. But if you look at the fear and greed, what I just showed you, this shows you, if you could just think about this, we still have, if your car can do 100 miles an hour and you're only sitting at 55, we still have a long time, right? Or we still have a long range that we could push here. The RPMs are probably only sitting at 4,000 here. This baby doesn't redline until 8,000, you know? And so when I look at that, I think to myself, we have a long time, or we still have room to push to the upside. That's the idea. Okay. We still have room to push to the upside. So, and you can see that we still have room to push to the upside before things become extremely greedy. Okay. So just remember that when people get extremely greedy, the idea is that the major participants in the market, or the majority of participants in the market, are on the call side. When the majority of the participants are on the call side, we look for the market to get that nice little rug pull. Okay. Timing is the variable. So when I use the SKEW, it's just a variable to use. Like down here, like I understand that these are extreme levels, and at some point we're a risk on environment. And you could have, said down here, hey man, I'm going long, but it might have taken you a long time, as you can see, before you really got that reward. So once again, timing is the variable. Okay, the idea here though is that when prices get into this risk on area, you're buying somewhere between 3 and 6 months out, and you're buying a little bit out of the money, and you're getting prepared for that move to the upside. And the idea here, again, you can't time the market. The idea is 3 to 6 months out, and you're prepping for the market to come in or move down. Okay, so that's demonstration there on the SKEW. The next thing that I want to show you is going to be the dollar, which is DXY. On TradingView and on Thinkorswim, it's $DXY. Now, why do I pay attention to this? Well, it's usually pretty straightforward. If the dollar is moving up, the market's moving down. If the dollar is moving down, the market's moving up. Well, check this out on a weekly perspective. Just supply and demand. The dollar came down into an inside and up. You could see that it started to go bid. It's rounding out, and if I were looking at anything else, every time this comes down to the cloud, we want to be going long. Anytime this goes down to the cloud, we want to be going long. And you see how it repeats itself. At some point, this cloud may not hold, and that's going to be really good for the bulls. So let me give you two scenarios, okay? So for bulls this week, what you would like to see is that we actually start to go ask underneath this body and start to take out this low, then that really gives you the confidence that that meter on the fear and greed is going to start pushing towards 100 miles an hour, right? We're going to start getting a lot greedier. Things are going to continue to start moving up, and people are going to have a really hard time trusting it. But here's the thing, we have the initial move of the dollar, which is right here on the inside and up. And we have some demand there. So if we break through there again, you can see where the dollar may start to go bid here in the market, then again pause for a moment. So again, taking this information and applying it to your cycles can really help you, right? The cycle is up, the cycle is down, the cycle is down. So again, if we can project where price is going to start bidding, okay, then we can start saying, well, if it bids and holds here, then we could start to see the dollar move up and then the market moving back, okay? So this tells me going into this week a little bit of caution, but it's a if this then that. If price breaks over the resistance level that I've had here for the last several months, guys, 106.3, I want you to be cautious, okay? If we start to break down and start moving back under 105.082, I do believe that the bulls can continue this run, okay? All right, so that is the dollar. Let's go ahead and go into TNX, okay? So this is the 10-year treasury, all right? And the idea here, I'm not going to go too much into it, but we have an inside and up here. It does look like it popped right back into resistance. I want to be looking at bigger beta names if we continue to fall here towards that 2.4, okay? My notes that have been on here for quite some time, they are relevant to this week. I want to talk about that. Inside and up and near the back of the sell zone, we did that. We got the topping wick, which let me know that, this was going to come in a little bit. You saw our bigger beta names start moving. Update looks like a possible pullback to 2.44. This was the last couple weeks, and we did indeed get very close to that, to this green box. And I still expect that green box to get touched. See, if we zoom in, you could see here that we didn't quite hit the cloud. It's very rare that we get this close and not touch it, okay? So it makes me feel like this zone that I picked out months ago, sorry, Control Z puts anything back that you accidentally move. That is a trick that I learned a long time ago that's on Thinkorswim or TradingView, okay? So anyways, that, again, this is resistance. We have topping wicks. We could push a little bit, but I do feel like the treasury is going to pull back into this area here. Okay. All right. So that leads me to TLT, right? What a like, ugly chart, honestly. Looking at this, I had a zone picked out from a long time ago. Now this zone could have been a lot tighter, and you can see that inside and up right here. But I believe I got this from a quarterly perspective. And when looking at this, it looks like it's a little extended to the downside. I mean, it really does. And when I look at it from a monthly standpoint, as long as the green box is holding, there's a high probability that we can move back up towards this cloud, up towards 124. Now, as far as this week is concerned, this is my idea, is if the low holds on the week, I think we could continue up. This is a typical H formation though, and H formations, I like to call them hope formations because you're hoping that price doesn't keep going down, but for some reason it does, right? So again, this is ugly because the cloud is resistance until proven otherwise, but pay attention to last week's low. And if we stay above that, there is a possibility on higher time frames saying that we can continue to move up here towards the cloud. Okay, I hope that makes sense. If it doesn't, please reach out to me if you have time. Okay. All right, so moving on, let's go ahead and get in here and take a look at, so we went over the SKEW, the dollar, the TNX, TLT. I went over the fear and greed with you. This is my overall sentiment, and I'm just going to read it to you really fast. It's really quick and easy. I like to do this, but I also like to do the video because the video gives you an actual plan. So again, on the SPY and the Qs, you have my neutral strategy. You could be trading TLT off of these plans. There's a lot of different stuff that we can be looking at. And after I read the overall sentiment, we'll take a look at ES futures, but I'm going to do that in a different segment. I'm going to actually, I need to take care of a few things. I'm going to do a video on futures for tonight and give you a few plans there. And so that will be in a different video. Okay. So let's go with this overall sentiment. This continues to be the hard part. Lower time frame is a bit extended. Okay, so let's go over here and let's go to 4 hour. Okay, and if we go to auto right there, all right, so a bit extended. It's not crazy. All right, and the higher time frame looks really bullish. What does this mean for me? The reward feels minimal to the downside, but the move feels like it needs a break or a digestion period. The action is hard when you start to get your personal thesis in the way. I think all of you would agree that. Okay. Looking back at the levels and actions, it's easy to beat yourself up and say, just follow the damn signals and levels. It's the ideas that are floating in the mind that slow down the execution and your own personal success. In many cases, this includes me. To be transparent, I'm frustrated because for the first time in my career, I'm conflicted when the market is actually moving up. I am a bull by nature and have been since the day that we started our service. So I'm always looking to buy the dips at major levels. All right. But now with the market moving up, it just feels like it's hard to ignore, folks. You can say that you are 100% technical, but that means that you would probably live in a cave. You don't actually have any kind of access to the outside world, right? Now, I don't watch news. I never watch news, but I still have friends. I still have family members, and everybody wants to give me their opinion. And so I still hear it and see it, right? So it gets in my head and then I start to think about it. And that's where I feel like I'm conflicted with the market and the move up. Now, I have to say we've had a lot of winners. So it's not like I haven't been taking advantage of the market. A couple things that I've done that have kind of stepped in my way is trying to time the market to the upside, meaning iron condors and stuff like that. And they've been a little bit frustrating because it's weird. You don't want the market to go over a certain level and it just keeps going and going. And you're frustrated because you're like, well, I should have just watched the signals, go long and stay long as price is staying above the cloud, as long as my signals are firing off. That is the bigger picture. And that's why today I really wanted to focus and show you the monthly charts because I feel like those are what are in control right now. And as you guys know, bigger money's not looking at 5-minute charts, folks. Bigger money's not looking at 4-hour charts. Okay. They're concentrated on monthly and quarterly charts. That's where the big money is. I believe fear and greed live in the smaller charts. I really, really do. Okay. All right. So just remember, always predefine your risk. If you're having a hard time and you're thinking like this, you have to remind yourself to take a trade and just accept the risk and move on. Moral of this week, just follow the charts and hunker down on what the charts say, not what your friends tell you, not what your favorite person on Twitter tells you, but just pay attention to the levels and pay attention to price. Price is the true indicator of what the market is doing. It's easier said than done most of the time. SPY and QQQ both have continued to surprise me as they slice through supply, like I said earlier, just like butter. But deep inside, I felt that the bull was deserving after such a dismal start to the year. You have to, right? You have to be like, hey, this is their time. Let them do what they're going to do. Just focus on the banners here and the overall trend of the move. I believe this will help you a lot. The rest of the chart say we'll have some room to be a tad more greedy, but before anything major happens, okay? Before anything major happens, I do believe we still have a little bit of room to the upside. We'll see what happens when we open up tonight. Don't let any of this cloud any of that. Again, concentrate on the levels. Some of my favorite companies are reporting and earnings season is still here and not over. this makes for it to be an amazing week. So keep your chin up, understand that this is fun, that most of you started this as a hobby, and keep it that way. All right? Life goes on, right? I'm sitting here looking out my window. It's beautiful outside. It's sunny. I can see the water. For me, it's time to get out, enjoy my day. I'll get back. I'll be looking at the futures. I'll put together some charts for you guys for there. We'll be looking at our trade plans going into this week. We are up 10% in our small account challenge there, which is very nice. We're up to about $15,400 in that account. And again, you guys know these are legit. They're coming straight from my account, from my API of Thinkorswim, straight to my room. All right. And then on the larger count, I only have three major positions coming in. And when I say major, the biggest position is my USO short at the moment. All right. But we have our stops in place. I understand how I want to stay in, where I want to get out. And again, I've shared that with you guys. All right. So I really appreciate you. If you have any questions on the broad market analysis, please reach out. For anyone that's watching this that's not a member, we do have trial memberships that are $5. A lot of people get worried. They're like, hey, if I don't want to continue, will I be automatically charged? And you will not. So ours is a little bit different. We give you that choice. You don't have to stay here. But what I will tell you is if you're staying here, you get to see me trade live. You get to see the real API alerts that come through. And in my opinion, there's nothing more transparent than what we do here at Trendy Trading. So again, lots of education, lots of trading, lots of charts, a lot of great plans. And if you think you like that and you're interested, then check out trendytrading.co, not com.co, and check me out there. Again, to all my members, you guys have a wonderful day. We will see you here shortly. I'll send out this link in the room. Actually, the link's already been sent, so that is your broad market analysis. If you need it, just click right there, and we'll see you soon. See you tonight, folks.